class Sunday night. All right. So I guess the first thing we'll discuss is how to how to pick an entry for a trade, how to pick an exit. A lot of you guys have good trade setups. You guys know when stock's going to rise and what's going to fall, but you guys don't know when to get in, when to get out. You guys end up losing money, and you wonder why. So hopefully today's session is going to kind of go over how to manage your risk a little bit better, how to set appropriate stop losses, and how to set perfect levels that will guide you in your trades. That's kind of the goal of this lesson. So as always, if you guys have any questions, let me know. And yeah, let's get right to it. So what do you want to start with? Yeah, you guys want to pick a stock to look at, just put it in the chat. We'll just do it real time.
I'll do ACB. Yeah.
You guys don't have any stocks in mind you want to have a look at Zoom? Baba. I like Baba better, actually. Let's look at Baba because we actually did that trade recently. All right, so first thing you guys want to do, whenever you look at trade, there's a couple things you want to look for. Right? First things first, no matter what you're doing, you have to establish your trend, right? So every stock is either in an uptrend or a downtrend, right? How to figure this out? Pull up a daily chart, check out the moving averages and the exponential moving averages, right? So if your price is above your 200 moving average, you are in generally an uptrend. It might be weak because the 200 moving average is pretty hard to fall above and below. But we can also use the shorter moving averages to look at, like the 50-day, sometimes a 9-day, 21-day. And we also can pull up our exponential moving averages, which I tend to use more often. So I look at the 200 EMA to kind of gauge if we are in an uptrend or a downtrend, right? So if you guys are looking at this, that yellow line at the bottom is our 200-day exponential moving average. So I would consider Baba still in an uptrend, right? It is below our 50 right now. It's trying to reclaim it with a bit of a bull flag. And we are also below our 21, but we're still trying to get above it, right? So a couple things I'm looking for. Eventually, I want to have my 21 cross above that 50. I want to have these lines cross again. That will give me some indication that we are back in price strength. I want to have my 9 cross my 21 and have them all these lines cross, which will confirm that we are in an uptrend in price.
Yeah, you got muted.
Hold up. Sorry about that. Sorry about that. All right. So like I was saying, we want to have our moving averages cross. That's kind of the ultimate goal. And every single time we have bullish crossovers in our moving averages, that is another signal to enter. That gives us more confidence in our entries for our trades. Does that make sense so far, guys? All right, good stuff. If you guys are looking at any stock, right, the first thing you want to do is chart your support and resistance levels, right? So, we have all these lines on this chart for a reason. These are all levels that we've charted based on price action that we've looked at in the past. And, we've drawn our wedges or triangles, all that good stuff, the bull flags, bear flags, all that stuff, right? And then we want to use these other moving averages and other indicators to kind of confirm whenever we're going to find a reversal, right? So, sometimes you guys will be trading, and then all of a sudden you see like a regular stock like Apple or Bob just go up 4% for no reason, and you wonder why it happens, right? Without any news. Well, more often than not, there's probably a gap fill in progress, or a stock just hit a very critical level and it went below a support line and it's trying to aggressively bounce back up, right? So if you guys recall, we actually took this trade on Baba we actually got it. I think we grabbed calls like right here on that candle, and I think we sold somewhere around here, which ended up giving about a 200% return. And a lot of you guys were asking how we knew it was going to reverse like right at that moment. There's many things we can look at to kind of figure out when the stock's going to reverse. And I'll be going over that later in today's session when I discuss divergence and how to use other indicators. But the main point I want to drive home before we get into anything is you must have your levels charted. You need to have good support and resistance lines in your charts. And you guys do need to establish whether you are in an uptrend or a downtrend, right? So are you guys good so far? Any questions before I move on? Because we're going to get some pretty advanced stuff right now. You guys are good? All right. Good to hear. All right, cool. So let's get to it, right? So last lesson, I did talk to you guys about a couple indicators. We went over MACD, we went over TTM squeeze, we went over the RSI, and I think we went over how to use volume with our trades, right? So again, all these indicators are just going to help with confirmation and to kind of give you signals that kind of confirm your theory, right? So, whenever you have an indicator showing you something that's not reflected in the price action, we call that divergence, right? And that's basically any discrepancy between the price action and the indicator, right? So, this chart kind of shows you, this is a pretty good chart to show you what I'm talking about. So if you guys are looking at the price action, I'll explain all of these in a second, right? But basically we have the price action on top, and on the bottom we have some indicator, right? This indicator right here can either be like a stochastic RSI, just regular RSI, sometimes MACD, sometimes momentum and TTM. Any indicators can be used to find divergence, right? And divergence basically shows you that a price reversal is going to happen almost immediately. If you guys spot clear divergence, you should be prepared for some very, very short-term reversal in price action, right? And I can kind of show you what this looks like. So this is a bit hard to see on this chart, but if you guys imagine that this is like a flat line, like between like right here, think of it as a flat line. You guys can see how this price right here is in a downtrend, but our indicator value is actually going up, right? So this signals that we actually have price strength, right? And we call this bullish divergence. Why? Because the lower wicks of our candles, we have lower lows in the price action, but our RSI or whatever indicator this is showing that we actually should be having higher price action, right? So the reason why this divergence occurs, right, is because there's weakness in whatever trend the price is showing you, right? So whenever you have higher lows in your RSI indicator or whichever one you're using, and you have lower lows in your price action, that actually means that we're actually our oversold threshold is getting higher, right? In our, let's say this is RSI, and you guys know the lower your RSI is, the more oversold you are, and the higher it is, the more overbought you are. But if you guys have like a higher threshold for where it bounces off to be oversold and the price reverses, that actually means that you're hitting your oversold mark a little bit earlier, even though your price is getting lower, which is showing that buyers are about to take over, right? So whenever we're saying that buyers are kind of getting control back or sellers are losing control, this is kind of an example of that, right? It means that this price being pushed down is unwarranted and that this reversal is actually favoring the upside, right? I think you guys will understand this concept a little bit better when I get to the other types of divergence. But here are some examples. I'll find many examples in many stocks, right? I can show you. I have a couple examples off the top of my head. Let's look at apps, actually, APPS. Let's look at that for a second. I don't remember what date it was. I think it was, I want to say here. Yeah, it's right here, right there. What's that circle? All right, so I think Yeah, I was trading the stock a couple times. I think I caught like a couple of these runs, but I don't remember what I was looking at. But I did say that the stock was going to fall considerably on this day. If you check out maybe the 15-minute candles, you might see it a bit better because I'm going to show some examples of, yeah, if you want to zoom in around there. I think this is where I saw it. Shoot. Okay. Yeah. Here's an example. All right. So if you guys are looking here, right? If you guys want to check out the MACD, for example, right? I'm just using MACD as the indicator of choice for this lesson, but let me see. What was I seeing here? I do remember saying this trade was going to go south very quickly. I'm on the spot right now. Shoot.
We can pick a different example.
Yeah, we'll find another example. I just remember. I don't remember why. Yeah, I mean, pick any stock. Apple's fine. We'll find divergence somewhere, whether it be in the 3-minute chart or the 1-minute chart. Because a lot of this is going to be hindsight. Let's see. Here's a good example, actually. It's a great example. Okay, so if you guys are looking here on Apple, right, we have we have these two highs right here, right? If you guys want to log those indicator values, you guys can see if you draw a line down to here, you guys look at that bar down there in the MACD, and then in this high, look over here, right? You guys see how our tops are increasing, but the MACD values are going down. This is showing weakness in this uptrend right here, right? So by the time you hit this spike, you should be looking to short on this candle, any one of these candles right here, right? So, people would wonder, how do you know that we're going to drop right here? Well, we've already been in this, if you guys saw that divergence, you'd be looking to short on one of those two candles. Maybe you guys want to wait for the second candle before you really get in, but these are 5-minute candles. So you have all of 10 minutes after having this candle close to get in a short position on one of those two candles. And had you done that correctly, you could have set a stop loss at that candle, and your target could have been this bottom line right here. I'm sure this line was drawn way back in the past, but regardless, if you guys, like I said, if you have your support and resistance levels charted, you would have caught this move, right? So a lot of people will see me play Apple puts or someone else play puts or calls, and you see that it just tanks like $2 instantly, and you wonder why. We're probably using one of these strategies right here, right? So whenever you're looking for divergence, you definitely want to be look at all different time frames. If you're day trading and scalping, I'll look at 3 and 5-minute charts. Again, I find that 1-minute charts don't really give you the best picture, and you get a lot of false signals. But if you guys are, if you guys are swinging things, I find 30-minute charts to be the most successful for me personally. But I know people who find success with 4-hour charts, 1-hour charts. I tend to stick between 15 minutes and 1 hour for my divergence trading. And 30 minutes, especially when I'm swinging, I find that to be the easiest.
Yeah,
But
15
you
and
got,
2 hours is the good one too.
yeah. So if you guys had gotten in on any of these candles, we have a bit of like a wick right here, rejecting that trend line. And then at this point, by the time you get to this first red candle, you might not want to get in the trade. You're not confident. You can probably enter like 1 or 2 contracts and then see if it works out. Again, set your stop loss above where the price was rejected, right? Because any news can come out, things can happen. There can be a breakout, right? There can be a bit of a false breakout. Divergences can also be used to help you avoid false breakouts, right? So let's say that this candle, after this blue candle, we had like another candle up here looking like this, and it went higher than that trend line. Depending on why the price broke out, I might actually grab puts immediately, right? Because then you'd see a tank even a lot more and go all the way down there, just because it doesn't make any sense. If these indicators are going from green to basically red in this time frame, and the candle's still going up in price, that's an easy short, and there's an easy way to make money on the way down with stock, right? And that's the difference between traders who will start to enter short positions after this candle and people who get in here, right? So these are kind of things you can look for in your charts to try and figure out if you're going to have a reversal in price. I don't see any more glaring divergences right here in this chart. If you want to go to like an hourly chart, see if you can find something else on Apple.
Craig, quick question. On the MACD, you see how it goes like electric green to forest green, like how you know, versus like how do you read that?
Well, the forward screen is just like it's kind of like a TTM squeeze. It's just showing
Same
you
thing.
a decrease in momentum, right? Yeah.
Like so it works the same way, like increase, decrease, and then like really bad, and then back to good.
Pretty much, yeah. So
Gotcha.
this bright red is like really bad downwards price action, and this red is like better red and going to green.
Gotcha. I got it.
Yep. What's this? This is Apple. Let me see. I don't see anything. Yeah, check out like an hourly chart. You might find something. Let me see here. Check out these 2 points. Is there anything there at all? I guarantee you it's some divergence there.
Oh, my bad.
To the tops of that. Let me see. Yeah, I don't see anything that's too it's obvious. Yeah, check the top of this candle right here. That one right there. Check, so it's right there. And then check right here. That candle. Okay. That's not the best example. But you guys can probably see how we're kind of in the red on that MACD right there. And also right here, we're in the green. So even though like this is not a very big difference in the MACD value, the difference between here and here is pretty significant. So at this point, I probably this is all hindsight. So I'm not sure if I would get in the trade until maybe this candle, just because this is not big enough of a difference right here, in my opinion, to warrant getting in the short position. But there is still divergence. So I might have waited until this bearish engulfing candle right here finished to close, and then I would have entered a short position. I think this is one of those days where SPY just sold off at the end of the day for no reason, which is why it's so weird. But you guys could have caught a nice $4 price move, and you guys know how much I can make in options contracts. So that's not the best example. We'll definitely find some more when we're charting. But I do want to go back to that PowerPoint so I can show you guys the other types of divergence before we move on to other stuff. Can you go to the PowerPoint? Yeah. All right. So like I said before, just to recap, lower lows and these higher lows. This is like regular bullish divergence in charts, and then bearish divergence is the opposite, right? So if you have, like we were talking about the higher highs just now in Apple's chart, if your indicators are showing lower values and we have higher highs, this is weakness in the uptrend, and a reversal is imminent, right? So at this candle, you can expect to start heading down. Does that make sense so far, guys, with the regular bullish and bearish divergence?
Yo, I had a question, Craig. For the divergence, right? That you could use it on RSI, TTM, and MACD and volume, like all 4 of them.
So I use it mainly on MACD and RSI. I don't think it works as well on TTM. I'm not sure why. I mean, TTM usually, I don't know. I don't use divergence in TTM, even though when the price is going up and you have decreasing momentum, that is a definition of divergence. I just tend to use the MACD and RSI more because I think it's a bit more accurate and can get me in trades faster. I use TTM mainly just to see how the strength of the trend, and less for divergence.
And then you don't use volume at all, right, for the divergence?
No, not really. I mean, we already talked about how if the price is going up and you're decreasing volume, that could be counted as divergence, but I don't use that. I don't call it divergence, really.
And then just a quick question, like I'm looking at a chart, and usually like the RSI, doesn't it usually, for the most part, follow the direction of the stock? So you're saying if it's not following the direction of the stock, let's say the RSI is up and the stock's coming down?
Yeah.
That's
find
the
examples.
sign?
Yeah, it's kind of a sign. It's not very easy to see. Some people actually have like scripts to find divergence for them, because some people can't see it. It's not going to be that obvious. I mean,
yeah, that's what I'm thinking.
Show you examples. I'll show you examples, guys. Don't worry. RSI is very easy for me to see, so I can MACD is not as easy, but we'll find a lot of examples. I do want to go over hidden bullish divergence because these two are actually the most common. I'm not sure why I call it hidden, but these are the most common ones. So I do want to bring this to your attention, right? So I guess the easiest one to understand conceptually is the hidden bearish divergence. And let me go over why. If you have prices showing a lower high, like this, so like if you have your prices going down and your RSI is increasing, this shows a lot of weakness in the price. Because what this means essentially is that whatever price, let's call this price level 10 and let's call this number 9, right? That means that your RSI was at like already an overbought level right here. And now when the price is even lower, you're more overbought than you were in the past, which doesn't really make any sense. So that shows huge weakness in your price. Does that concept make sense to you guys? If you guys can understand that, you guys will understand how to trade divergences. I'll just say it one more time for those who didn't catch it.
Yeah,
Right?
I didn't catch it.
Yeah, I'll say it again. So if your prices are getting lower, right? If your prices are getting lower, but you're reaching your overbought status more quickly, that shows a huge weakness in your price action, because that means that you're getting overbought. You're like your overbought indicator, which let's call this RSI. I mean, I know it's not, but let's say your RSI is 70 here, and then over here it's 80, right? But you're getting an overbought signal when your price is even lower. So that just shows the price is ready to start getting pushed all the way down, because that means that if you reach the higher you get in your RSI or any indicator, then the stronger the reversal is going to be, right? So if you're already recording higher indicator values, and your price is getting lower, you can expect to be in a downtrend very quickly. And the same thing goes for the hidden bullish divergence, right? If you reach oversold territory and you have higher lows, that means that this trend is going to continue upwards, right? Because that means, let's say your RSI is, hold on a second. Let's say your RSI is like 40 right here. I was making up numbers, guys. And down here, it's 20. Shit. And over here is 20. That means that you're reaching your oversold value at a higher price level, right? Which shows you huge strength in your price, which means that you were almost, it's almost certain that your price can continue upwards, right? So the difference between hidden and regular divergences, right, is these two right here, bullish, these like the regular ones, these show you a reversal, right? So if you have bullish divergence, your price should reverse and go upwards, and this should go from high to low. And the hidden divergences show you continuation, right? So this shows you continuation of an uptrend because you reach oversold more soon and you're going higher. And over here, this shows you continuation of a downtrend because you're reaching your overbought status when you're at a lower price level, which shows you weakness, and that should ensure that your price will keep going down. All right. I hope that kind of makes sense to you guys. We'll send that chart to you if you guys want it. Yeah, it takes a lot of practice. The thing about divergence is that it works almost every time. The downside is it's not as common, right? Most indicators will show what's happening in price. So divergence is not very common, which is why it works so well to find reversals. I'm just going to go through the chat to find the questions before I move on. Let's see. Yeah, so we'll find examples on more stocks. I'll use RSI for that. For RSI, I use 70 and 30 as my levels. I think 80 and 20 are also good numbers. I just personally stick to the default. I mean, like in my mind, I usually anything above like 75, 77, that's when I start considering it to be overbought. But, you know,
What does RSI stand for?
Our relative strength index. It just shows you overbought and oversold levels in price action. All right, someone asked, in the bullish divergence diagram, what higher levels are we seeing? All right, I'll show you some examples actually. Whoever this is, CIEL, just send me a DM right now. I'm not sure who you are in the group, but just send me a message on Discord so I can answer it better later. Okay. All right. Here's a great example, actually, right off the bat. You guys see Baba right now? Can you guys see how we kind of we just basically took a shit in the morning, and we got straight to the oversold territory? But you guys see how our RSI is now at a little price channel right here? It's increasing, right? Sorry, that's super messy. I'm not sure my thing is so. All right. Yeah. So our RSI is increasing, and our price is kind of staying flat right now, right? So if our price was in a downtrend right now, or if it's staying flat, then we're actually this is showing some price strength, which is good, right? Let me see. Hold on a second. No, it actually might dump a little bit more. Yeah, I meant the opposite. This might dump a little bit more. I don't want it to, but it might. Reason being, yeah, I got it backwards. Sorry, guys. So we have, yeah, we're actually reaching overbought levels, and their price has barely moved, which means that we can probably expect some more downside in the stock, right? So outside of this being like an extended bear flag, this actually might dump a little bit more. Our TTM is kind of still flat, right? So even though it did go from oversold to popping again, it actually might dump again in the morning. So at this point, since I can't see it very clearly, I would go to another time frame, maybe a 15-minute or hourly. Yeah, to kind of see if we can find something else. Yeah, maybe like a yeah. So yeah, not much is going on here right now. Yeah, check out the 15-minute because like we don't really have any spikes in the RSI to see anything. Yeah, let's like zoom into here. Yeah. So looking at this, yeah, we have yeah, the RSI is increasing right now, and our price has barely moved relative to it. So there's a very good chance. I would bet right now that this BABA actually comes down, tests this 274 level, and actually probably dumps down to here. I'd be very surprised to see a stock breakout. And in the event that we do come back up and we test this level up here, I do think we're actually going to come dump again, just based on the price action. And you guys are looking right here, the MACD, it did cross, but it's looking a little weak already. And I don't think it doesn't look very good right now. So this actually might dump just based off divergence. We do also have increasing selling volume here, even though the price has barely moved here. So I don't think BABA has price strength right now based off of that.
Yeah, Craig, I have a question.
What's up?
So like, are big institutions looking at the same type of thing, like the divergence, or like their algorithms or their systems are looking for that to?
Algorithms look for it. I don't think institutions are as concerned with the price because they can move it wherever they want it to. They're just concerned with stopping out people because they want more shares. We can find divergence and we can find where the price is weak. As traders, we use divergence primarily to avoid false breakouts and to just not get caught in a trade, right? Because this will all come together to try and figure out where to pick your entries for a trade long term. So yeah, I hope it's kind of making sense so far, guys. This is a bit more of an advanced topic, but like I said, you guys always want to be aware of divergences because it will make your trading life a lot easier. A good way to spot divergences, a very easy way to practice is, try and form trend lines with your RSI. Like not everything's going to be divergence, obviously. But for example, here, you guys are looking, like you guys know that anything above this line is considered overbought and anything below here is oversold. So if you guys look here, for example, you guys see how we have a bit of trend in the RSI. It's trending upwards. I mean, I know it's pre-market, so I'm not going to give it that much weight. But let's say you had higher lows up here, and you guys see here we have lower lows in our price action, you guys saw what happened. Once RSI kind of passed that level up here, our price started skyrocketing, right? So, I mean, again, it's pre-market, so I'm not really going to give that much consideration to it. But that's a clear example of divergence right here, right? 1, 2, 3, downtrend, and then 1, 2, 3, right? Uptrend, right? And there we go.
Wait. 1, 2, 3 uptrend. What was the mouse pointing at?
I'm looking at the higher lows in our RSI right here. So we're in oversold territory. So automatically, I'm going to look for any trend I can find in overbought or oversold territory. So I'm looking at those little peaks right there. You see how they're getting higher? Like an RSI down here versus down here. You see that? You see how it's increasing?
Okay.
Right? And you see how
Yeah.
downwards price channel right there? Right.
Yes.
So a lot of you guys would be like, holy shit, Bob just gapped up for no reason. How did that happen? Well, if you guys were paying attention, you guys would have seen this, right? And if you guys had charted your support and resistance levels, you guys could have gotten in above this level, right? So whenever we say in the morning, grab Tesla calls over 574.5, our 574, whatever line it is, right? I don't know what that line is, but like we're going to have a line at resistance right here, whatever line we have charted. And then we're looking at the divergence, and that's how I can confirm that this is either going to pop at the bell or dump at the bell. I don't really know. It's not
Now,
always
what's
going to
the
be there. But
correct? I was gonna ask, what's the probability of success with this kind of knowledge?
with divergence trading, I would say like 90%.
Got
The only thing I can really mess with divergence is news. But the downside is, like I said earlier, this doesn't happen very often, right? Like the chances that you spot it and that it actually happens are pretty slim, which is
Yeah.
why it's not always going to be in your best interest. Like, it should be glaringly obvious once you know what to look for. I do find it a lot easier to find divergence if you are looking for it in the overbought and oversold areas. Like, for example, here, I can't really tell much. There's no trend in that RSI. It's just random. And, it didn't really show you much here.
Yeah.
But another tip I would give you is always look at where we see an aggressive bounce in price. So, for example, if I look at these wicks right here, all of these wicks right here are going to have little spikes somewhere in the RSI. If you want to move your mouse there, it's like those 3 circles. Yeah, that's one spike right there. That's another spike, and then this circle right here is, where is that? Like over here. Yeah, down here. So you guys see we went downtrend in the RSI, right? And we also have a downtrend in price, right? So there's no divergence there. So that doesn't tell us anything because the RSI, our indicators are respecting the trend. So that's not really an example of divergence, right? But sometimes you guys can look for like the tops. Like if you see a price reject something very aggressively, then the first thing you can do, if you see any double top, you guys learned that double tops usually are bearish and they lead to downwards price action once you cross your middle ground. But sometimes you can tell if a double top is going to result in either a breakout or it's going to dump just using divergence, right? So if you go back to the chart actually of divergence, I want to show you guys one more thing. It'd be very useful and can help you find a lot more patterns, right? So you guys see how for the hidden bearish divergence, how we talk about lower highs and everything. Well, if you guys remember the concept I told you about having higher indicator values with lower highs, this also works on double bottoms and double tops, right? So if you have a double top, for example, let's say this wasn't in a downtrend and instead, our price was just hitting the top of a resistance level twice like this, right? And then bouncing off again. If your indicator values were higher with a double top, then that's almost confirmation that you can probably get in this double top trade early and it's going to start dumping, right? Like a double top is essentially the same thing as having like lower highs, right? It's basically the same thing. As long as your top isn't higher than the last top, I mean, I know I kind of do this horribly, but like if this high was higher and you had indicators that were higher, it's not really showing you anything. But if you have like a flat price action, like if it bounced off the exact same level like this, and your indicator values are going up like this, then this is definitely going to dump. Like there's no question it's going to dump, because it means that hitting your level twice at resistance actually caused you to have more overbought sentiment in the market, which is going to definitely push the price down some more. I will share some charts that will show these examples very clearly. You know, I've made many trades for you guys using Divergence, and I can kind of show you my thought process with some of these trades. I mean, obviously there's more to this, but this is kind of just an intro to it. All right, we do have to restart Zoom just because of timing. So I'll send a new link, guys, and I'll see you in 2 minutes or so. Let me just get the question. What was the question right there? Double top overbought RSI. Yes, absolutely. All right.